just thinking about the context for the conference, which is, tapping Africa's opportunities and the role that investing and investments and money has to play within that broad scheme, and to try to approach that from an institutional investor mindset. Because one of the things that you'll see about Africa is there's tons of opportunities, and there's a lot of money in the US, in Europe, in Asia, that is seeking opportunities but seems disconnected from those opportunities. And so the question is, within the broader perspective of tapping Africa's potential, how do you get the capital connected to those opportunities? So what I thought I'd do is address this from the perspective of us as institutional investors who are getting into Africa, and we're trying to get into Africa a lot more aggressively. We have invested in the past. It's been very, very ad hoc and very opportunistic. We now have an Africa allocation across all kinds of things that's wide open that I'm leading. And along with doing that, one of the things we're trying to do is get other people focused on thinking about, interested in Africa and seeing the opportunities. So a good way to do that is to get into our heads. What are we thinking about when we go around the world and we invest globally and we're not constrained in where we invest in? What are we thinking about? What types of questions are we asking? And how does that relate to Africa? There's really 4 things that we are looking at. The first is navigation, and there's some very simple things. How big is the place? How do we get there? Can we get there? And, for some places that people invest in, can you get there is a very simple question that is assumed to be yes. The answer to which is assumed to be yes. In Africa, you cannot assume that answer to be yes. There's a lot of places you literally cannot get to if you wanted to. How trustworthy is the information flow? What are the logistics? And then number 2, what's the macro backdrop? A lot of people, again, when they think about opportunities, you'll hear anecdotal stories. I'll give examples of anecdotal stories that are very, very micro. But in the grand scheme of things, look, if you buy a great company, a great bus company, for example, it really doesn't matter that that company is a great company if the foreign exchange is going to wipe out any money you make, or the inflation is going to kill you, or people, and so on. So the macro backdrop is critical. The micro backdrop is also critical. And then as institutions, can you really get in and capture those investments? What are the vehicles to use? So first of all, this is titled, I titled this, There Are Many Africas. A lot of times, if you go back, let's say 15 years ago, there are a lot of people who thought of Africa as a country. That's evolved to where people now actually know there's several countries in Africa. But I think for a lot of people, it's not, the size and scale and differentiation that exists is not that clear to people that don't spend the time thinking about it. Even for us who are now investing, we are on a regular basis discovering just how complex this place is. So just to quickly put this into perspective, you could put the US, China, India, Western Europe, and Japan into Africa. So it's really that scope of an area that you're talking about. And the differentiation is just massive, right? There's 2,000 languages and cultures, and there's huge distinctions. The largest economy, which is South Africa, is almost 2,000 times the smallest economy. The growth rates go from 1% to 11%. So when you think about that place, you really have to think about it as a highly differentiated set of geographies. This I won't, again, spend much time on. People who've spoken before me today have talked about the macro picture and so on and so forth. The thing for us that's important is that it's not just a one-off situation. There is a trend literally in everything that you see. And these are big picture numbers. But if you've lived in Africa, grown up in Africa, or if you go to Africa regularly, you will see trends in very basic things. The number of people that are using soap. The number of people that are using cell phones. I grew up in East Africa. My grandmother, when I was growing up, no one had a cell phone. Now I can call my grandmother and she texts me on 2 cell phones. So, there's trends that are important, because when you start to get trends at the macro level, you start to get more comfort with the investment opportunities. And then, from our perspective as global investors, and I think this is important, and this is a message that I personally have been trying to take to some of the investment funds that we talk to in Africa, which is that the investment funds in Africa cannot afford to think of the opportunity within the context of Africa. They really have to think of it within the context of global. Because money is global. I, as an investor, have absolutely no reason to be in Africa from an investment perspective. And so the real question is, how does Africa fit within the global stage? And this is really the first time that you've gotten a picture like this, literally in the history of Africa, right? Which is that it is growing essentially faster than pretty much everyone else except for China and India. And as I'll show later on, there's sections of Africa that are growing as fast as China or India that everyone is excited about. And you can see that capital started to flow. The important thing about this, though, from an institutional perspective, is that it is not yet crowded. If you go into Brazil or you go into Indonesia, you're going to run into the same people. I was in Indonesia probably 6 months ago. A lot of the people that we would compare ourselves to, that we compete with, were all on the same trip. And when you start to see that, then to us it starts to get less interesting than a place like Africa, where you're going to run into a couple of people who are typically early movers, where then the opportunity for outsized returns is still very significant. Now, the next question for us is to understand the concept of this growth, the nature of this growth. Is it essentially a country? There's a lot of places that you look at where the region is essentially driven by one country. If you look at certain parts of Southeast Asia, you're going to find that it's literally an Indonesia story. Money will funnel through Singapore, will funnel through whatever, but essentially one country story. The picture for Africa for us becomes even more interesting because when we look at that, there's huge differentiation. And as I mentioned before, and maybe something that not as many people are aware of, 40% of Africa is growing faster than essentially the rest of the world. That is huge for an economy of this size, and especially for an economy where you do not have enough money chasing those opportunities. Now, that's the opportunity side. We obviously have to think about the risk side. There's a reason why there's not a lot of money in Africa, and historically there's not been a lot of money in Africa. One of the biggest things people are focused on is politics. And I think for politics, when we started looking at Africa as institutional investors, the first thing we looked at was really the macro. But we tried to put that within the broader context of global political risk. I mean, if you go into Latin America, you have political risk. You go into China, you have political risk. Everyone talks about, the need for democracy and how important democracy is. Okay, well, we could argue about whether or not China is democratic. There's a lot of people making money and creating wealth in China. So really the important thing for us is the stability of the politics, the nature of the freedoms people have, and the source of that stability. I mean, one of the things I think that you realize about Africa that is very, very subtle is that for the first time in a lot of countries, there is a larger number of people that have more to lose from instability than to gain from it. And it's a very subtle thing that you really only see by going to a lot of places regularly and talking to people. There's more people who are making more, they can send their kids to school, they eat better, and so now political instability starts to threaten the things they've gotten used to. Then it becomes personal, so that it's not anymore really about can I vote or not vote, or do I support the current president. It is that political instability threatens their lifestyles, their kids' lifestyles, and that then becomes the biggest source of stability, I think, within Africa. And you're seeing a lot of that. You're obviously seeing some of the numbers people are used to, like tensions declining and so on. Now, that's at the political level, but we obviously also focused on some of the other bigger things like the institutions that are being built. And again, if you look at the anecdotes around the institutions, let's say 10 or 15 years ago, it was not unusual to find a central bank that if someone from the president's office walked into the central bank and said, I want X amount of dollars in local currency, they would walk out with it. Literally, that's how it worked, right? Now, when you go in to talk to central bankers, first of all, before you go in, you can get data essentially on most central bank websites, which for the history over which that's happened is a very significant development. A lot of training has happened. A lot of infrastructure exists for a lot of central banks. You've had certain countries in Asia and Latin America now coming to Africa to borrow central bankers for training, to train them on how to think about things. So again, that gives us some stability that it's no longer just the individuals. You're starting to get some institutionalization in the policies and so on. All right, so then we say the place is big, so it's relevant and it's important. We can actually get there. The macro is interesting and compelling. It's differentiated enough. There's a lot of growth. It looks like it is stable growth. And so then we start to look at the micro opportunities. What micro opportunities exist? And I've just listed 6 sort of themes here that are important. I'll give a couple anecdotes so people get a sense for the types of things that are there. Because again, the theme of this particular part of the conference is the uncharted territory. So really putting some detail around that. In Africa, you see 2 sets of businesses. You can generally group the businesses into 2 sets of businesses. You have some businesses that are very, very simple businesses. Basic business models in a normal economy, they should not exist as opportunities. I'll give you some examples. If you come to East Africa, Eastern Africa is about 100 million people. There is not one single regional bus transportation company. You've got a lot of buses, you've got a lot of small cabs driving people around, all owned by individuals. Half the time they're going to go back and come back empty. In West Africa, this was the case 5 years ago. In Nigeria, someone figured this out. Now you have ABC Transport Company, highly profitable company listed on the exchange. If you go to some of the smaller countries, you will find that the agricultural produce goes bad. Half of it goes bad. In Nigeria, 60% of tomatoes goes bad. Now, you have to look beneath that and say 60% of tomatoes go bad in Nigeria for a reason, which is that the power problem is a really big problem. You have to run that in generators. Maybe the margins don't make sense. But that case is exactly the same case in Uganda. It's the case in Rwanda. It's the case in Malawi. And some of those places actually have a power supply. So someone that is able to look at that level will figure out a way, and they will make a lot of money from doing very basic things. When tomatoes go bad, what you need to do is refrigerate them. Right? It's not, and these are things we take for granted here because, you buy tomatoes, you put them in the refrigerator. So there's some very, very simple businesses of that nature. Education is a huge business. Historically, people have seen the path to success essentially as education. So you'll find families, from wealthy families to very, very poor families entirely focused on trying to make sure their kids do better than they did. And the way for that to happen is education. Now, again, if you went into a Uganda or a Kenya or a region and you said, what are the preeminent educational institutions? They are primarily schools that were started by missionaries 50 or 100 years ago. There's a lot of private schools that are all disjointed. They're all run by individuals. They're small scale. If you go to Asia, you find companies like Laureate that runs a lot of highly profitable schools, great standards, great branding. So again, very simple business models. Then you've got very complex things that happen across countries that funds are starting to tap into. Huge regionalization plays. If you look 2 or 3 years ago, the Nigerian banks, 4 years ago, Nigerian banks went continental. So you had Nigerian banks coming into East Africa, Central Africa, and so on. Those are complex transactions. And the reason I distinguish between those two is as we think about the opportunities, we have to say one of the key challenges that Africa has is human resources, which, has been discussed just before this. And it's starting to get fixed because I think a number of Africans who've gone to school abroad or worked abroad are starting to see the right set of things that allows them to come back and participate and still get paid and feel like they can get paid and so on. But the demand and supply factor for human resources, there's still a huge gap in that space. So as we think about opportunities, the simple businesses primarily are not a human resource capital constrained issue. They are constrained by capital, regular cash. You need a CFO and a CEO who are good, and then you need a bunch of bus drivers who can be trained, and there's a dime a dozen. If you're doing a multinational bank deal, then you need serious resources. You need to try to get a bunch of guys from Europe, which is close to Africa, to come and work. Well, are you going to fly them back and forth, or are you going to put them who wants to live in Lagos, who don't want to deal with traffic, and then it starts to get complex. Okay, so those are really the two key distinctions in terms of opportunities. Now, a lot of people also focus on corruption. So most people that we speak to in our LP base, the first thing they tell you when you say to them, I'm looking at an investment in, pick a country in Africa, they'll say, what about corruption? What are you doing with corruption? And, our perspective, I say my perspective on corruption is a little bit like the perspective on politics, which is that the political risk issue is a global issue. You just have to define what political risk means. Is it the country falling apart, or is it someone's son interfering in your industry and making sure you can't make a profit, right? Corruption is the same thing, right? So I put a couple interesting charts in here. This is India. Tons of money. Billions of dollars in India. Big problem. This is China, right? Billions of dollars in China. Same problem. Well, people have obviously figured out a way to deal with corruption in these places. This is Brazil. This is Brazil's current president. Just before she ran for office, same problem. Now, I'm not minimizing the challenge that corruption introduces. It is a huge challenge, and depending on the country you go to, it is prohibitive in certain places. But what we've realized in trying to go and do business in Africa is it really just comes down to one thing. It comes down to people. Who do you know that is trustworthy? What is their value system? And usually for the people who have the right alignment of value systems. It's a small subset of people, but essentially those people know each other because they have to be successful in doing business.